Okay, we are live. Uh, my name is David Kosmider. I'm the creator of Timing Research. Thank you for being here. This is our show for November 3rd, 2014. Today we will be discussing the 58th weekly report from Timing Research. If you haven't had a chance to view this one yet, just go to TimingResearch.com/reports and you can download this or any previous report. If you are new to timing research, we are building a crowdsourced sentiment indicator. Every week I send out a survey to the full audience and to get their to get everyone's thoughts on upcoming market movements, and then I compile the data into a report that is published every Sunday. So I have three guests with me today. John Seville of acornwealthcorp.com, John Netto of the ProteanTrader.com. Am I pronouncing that right? Protean Trader?
Yeah, that's correct. Protein.
Okay. And Dave Landry of DaveLandry.com. So, John Seville, let's start with you. Thanks for being here again. If you could tell everyone a little bit about yourself.
Sure, thanks, David. Yeah, I started out about 10, 11 years back, mostly doing technical work with the markets. The Acorn Wealth was started now, or 7 years ago this Friday, teaching technical analysis. So the main focus that we indulge in is trying to focus on where the smart money is going. So a strong focus on where money flow is indicating that the markets are trending towards, and that's what we teach.
Okay, great, thank you. And John Netto, if you could tell everyone a little bit about yourself.
Yeah, I'm a short-term, high-velocity macro trader, a person that trades around the macro narrative. I combine technical, fundamental, and sentiment analysis of what the markets are doing, and ultimately I'm trying to maximize return punitive risk. So I combine mean reverting, trend following, vol crush, optionality in trades. I trade 35 futures markets. I'd say 99% of my P&L attribution comes from trading the future space. I have a book coming out called The Global Macro Edge, Maximize and Return Punitive Risk. And everything I do from the in terms of screening trades, screening markets, is done from a return punitive risk basis. I have what's called a Netto number dashboard, and that assesses which markets are a relative strength of each market based on how I perceive that strength is coming down. And so the Netto number, the higher the Netto number, the better the market is performing on a risk-adjusted basis. The lower the Netto number, the worse it's performing. And that allows me to group various markets, or group a lot of markets within a few seconds, and understand whether or not the money flows are either corroborating or going against that macro narrative.
Okay. Okay, thank you. Thank you for being here. And Dave Landry, tell us a little bit about yourself.
Thank you, David. Thanks for having me today. I've been trading for about 20 years or so professionally. I was a commodity trading advisor, CTA, for about 14 of those years. Early in my career, I did gravitate over to stocks because I think there's a better edge in stocks. And I've written 3 books on trading stocks. The latest is The Layman's Guide to Trading Stocks. I'm a short-term to intermediate-term trader, but I'll hold positions as long as they move in my favor. Trend trader, and I'm slotted as a swing trader, but the reality is I think you can only predict the short term, and if the short term begins to work out, then you could follow that trend via trailing stops and taking partial profits for a long time. So I'm kind of I'm known in the industry as a trend trader, and some people actually call me the trend following moron. So, which is a title that actually stuck. But definitely believe in trade to trend. I think you can only predict the short term when it comes to markets. But again, you can stick with the trend as long as it moves in your favor. If it's weeks, months, and even years.
Okay, great. Thank you. Thank you for being here. And let's get started with the report now. And I have activated the Q&A app for this Hangout. So for all of you watching, if you have any questions for any of us, just type your questions in and we'll get to that at the end of the show. So I'm going to share my screen now. So this is the report that was published last night. So the first page of the report always covers the multiple choice questions. First one is based on any technical or fundamental indicators that you want to use. Would you guess that the S move higher or lower next week? So that's starting today, November 3rd through 7th. 61% of respondents predicted higher for this week. 9% predicted lower. So, John, Phil, let's start with you. What do you think for this week?
Thanks, David. Yeah, actually, this is a very interesting day to be asking that question because for those who follow technical analysis like myself would recognise that today is actually open range for the month of November, and for those that don't know what that is, it's where basically the first trading day of the month will set a specific range where if we break higher or lower. Typically, that will set the trend for the next several weeks until options expiration Friday. So I think that many people are wondering whether the rally over the last few weeks has been simply a short squeeze, where they've been giving everyone on the short side of the market a real hard time, or whether there's some real value behind it. So I'm going to go contrarian, and I'm hoping we have a healthy pullback, and so I'm looking for lower.
Okay. And John Netto, what's your prediction for the week?
Yeah, I think something that I read in a newsletter called Sight Beyond Sight, put out by a company called Rearview Macro. Guy does a good job aggregating market stats, which I think complement a lot of the research you just did. And basically, what he pointed out in this morning's newsletter was that from October 27th, it begins the most bullish 5-day period since 1950, as we saw from the first 4 days of that. So we're dealing with some cyclicality in here, and also a macro backdrop with what the BOJ did last week, which is going to be very conducive for stocks, especially ones that pay a very nice dividend. And you look at S&P 500, and this relative performance since 2010 against global equity indexes out there, such as the Dow Jones Eurostoxx, such as the FTSE, such as the NASDAQ, such as the Russell, and that outperformance in the S&P can be attributed in part to the dividend yield chase that's gone on, given the dividend yield of the S&P 500 relative to those other markets out there, and the relative outperformance of the U.S. economy. So the play by the BOJ last week caught the markets completely by surprise and reinforces a theme of chasing yield. And the S&P 500 is a place to go and do that. And you look 2, 3 weeks ago, 4 weeks ago, in terms of why the S&P 500 sold down, or at least what I believe one of the reasons is, it's been a repositioning based on a higher interest rate environment. And so despite the Fed last week, giving the sense that rates are going to, head up in Q3 of 2015, the reality of it, given what the BOJ has done, is force people to reassess some of that dynamic, not only with U.S. investors, but global investors worldwide that want to find dividends, and the S&P is a great place to do that. And given that dynamic and given that seasonality, I think the S&P closes higher this week. And it's a good spot to buy any technical dips in that process, given that macro narrative.
So for the week, what do you
Higher. So
okay. All right, thank you. And Dave Landry, what's your thoughts for the week?
Okay, it's a little tricky for me because I'm a trend guy and I trade reversion to the mean in the direction of the trend. In other words, I'm a pullback player. So normally what I'm doing is I'm looking for trend first, and then I'm looking for a pullback in that trend. And as a trend guy, I'm not going to argue with a market that's making new highs. So the trend guy in me wants to say higher, but we are so overbought in here. And I think as one of the Johns mentioned, we're Seville, there's a lot of short covering that has happened. The other thing too that has happened is I think that a lot of bottom fishers have come in here, and a lot of people held on through the dips because you've been taught to hold on through the dips since 2009, and one of these dips isn't going to work. So the trade guy in me is thinking higher, but the cautious side of me is thinking that we're going to correct between now and Friday. So I'm going to go ahead and go in as saying that we're going to be lower a week from now, but as long as we can hang around these old highs, let's say around 2,000 or so in the S&P 500, I think the market will be just fine. But as far as the survey is concerned, let's put me down as lower.
Okay, great. So we have two lower against the sentiment and one higher. So um, the next question of the survey is for rating confidence. It asks, rate your confidence in your answer to question 2 on a scale of with 0 being no confidence and 10 being extremely confident. So the average of all guesses this week was 6.329, while the average of higher guesses was 6.0, and the average for lower guesses was 5.938. So slightly higher on the or slightly higher confidence on the bullish guesses for this week. So let's uh, start with John Seville again. What is your confidence for in your lower guess for this week?
Well, I'm going to agree with Dave Landry. I think that we've got momentum behind this move, with a with a potential for that reversal. So I'm going to put it down as a 6.
Okay. And John Netto, what would you say your confidence in your
My
higher
confidence
guesses?
is an 8. The week closed higher. 8, ocho.
Okay. And Dave, what's your
Well, I would be confident of 10 that we at some point go lower at some point this week and correct between now and Friday, just because it's simply not sustainable. I mean, I hope it is. When I'm looking at some of these charts, you got the REITs behaving like .coms in '99. You got utilities acting like that. Health service stocks going straight up. But I'm going to go ahead and give my confidence of lower a 6, and only a 6, because I think we're going to dip between now and Friday. But whether or not we go higher first and that dip brings us below where we are today, I think it's a crapshoot. So I'm going to go with a 6 on confidence.
Oh, okay. All right, thank you. And so the bottom of page 1 of the report always shows the full history, and the numerical history is on page 2 of the report. So now we're going to move on to the open response questions. Question 1 is always the same. What developing events, technical or fundamental, will you be watching out for the next week that might have a positive or negative impact on the S&P 500 and other markets? So, John Seville, let's start with you again. What's besides what you've already mentioned, do you have anything else you're watching for this week?
Yeah, I mean, outside of open range, I think that obviously we've got the last a few more companies left for earnings announcements. It's obviously been an interesting, well, a very exciting earnings season with I think the Visa surprise to the upside. Groupon, LinkedIn also outperforming expectations following the Facebook and Twitter flop. So we've it'll be interesting to see what these last few reporting companies have to offer. But the most important thing that I'm looking for is to try not to predict too much what I think the market should do this week, and instead watch what the market's showing me it's going to do by looking for where we go tomorrow's after today's range.
Okay. All right. And John Netto, do you have anything else
Yeah,
you're watching
elections
this week?
tomorrow. Obviously, great chance for Republicans to take control of the Senate, pick up more seats in Congress, in the House. Non-farm payroll on Friday. I think the dialogue, we want good news. Street right now has come up on their consensus up to 235,000. And a follow from this BOJ decision last week, which caught the market off guard. But really, non-farm payrolls on Friday. The idea that wages may pick up and increase can really do a lot here. Could be the catalyst which breaks us out above this level and catches a lot of people still underexposed, chasing their benchmarks, which a lot of hedge fund managers have underperformed their benchmarks this year, and even long-only managers have underperformed significantly as well. So these are all things that I think could be potential catalyst to another leg higher.
Okay. Thank you. And Dave, do you have anything else you're watching for this week?
As a pure technician, I'm not watching for any news. I ignore all news. But as Netto pointed out, we do have elections tomorrow, and I think that there's some conspiracy theorists out there, I think, that are saying that the market's been propped up ahead of that. I don't follow all that, but it sure seems like there's some reason why this market is going up, and I don't care whether it's going up or down, as long as it goes somewhere and moves for me. So I'm not worried about anything. The outcome of elections, I'm not worried about, at least as far as concerned with the market. I'm not worried about Ebola. I'm not worried about earnings or anything. We're just gonna keep following along. I've got some shorts still on, believe it or not, from the last dip. We get squeezed out. We get squeezed out. Got a couple of longs left, and hopefully they'll continue higher. So I would ignore all the news, because longer term you're going to find out that news is going to be mostly noise when it comes to the markets.
Mhm. Okay, thank you. And so now we're going to move on to question 4 of the survey. That's different each week. And so, if anyone watching has any suggestions for future questions, you can go to TimingResearch.com/question idea for one of the future surveys. So this week, the question is, according to Forbes, the number of billionaires globally has doubled since. Are you concerned about income inequality in the world? If so, what problems do you think this will lead to long term? And another stat I read while I was writing that question was the top 85 people in the world own as much wealth as the bottom half of the entire world population. So it would be a kind of a controversial topic, and so anyway, I went through and quantified the results of what people said about the open response, income inequality, and about 67% said yes, about 33% said no. So John Seville, let's start with you. Do you have any thoughts about this?
Well, it's a very it's obviously a very important question that raises many different, opens a can of worms, really. I mean, I guess the first thing that came to mind when I read the question last night was, well, I wonder how many people are, what the differences of how many people that know how to short stocks versus those who don't. Because I mean, if that's the differentiator is since the crash, then maybe more people are opening up their margin accounts and going the opposite way. But it's actually something I've delved into before. I mean, having a background, I actually used to work with World Vision for quite a number of years, and looked at the kind of the study of what I call the happiness index. And if you look worldwide at the difference between those who are considered to be happy and not, that there is an expectancy that those who make over $200,000 or more generally live 25% longer and are considered happier. But beyond that level, there's very little difference in what we call the happiness index above and beyond a certain amount of money. It's more obviously to do with the amount of healthcare one can provide themselves and less stress, presumably. But on the lower end of things, I think the biggest problem is awareness of the issues that those that are not in the public light have to go through. And if we look at the Ebola situation, we've got obviously media footage of 6 different people in suits taking someone into an ambulance, compared to hundreds of people dying on the streets in Africa with no one around. So I think the inequality issue has always been there, and the fact that one extreme of the sliding scale has doubled, I think is an extreme. But I think that the problems that face the world have been there for centuries. So if we're going to take a stand, then it's going to take a very big public awareness to do so.
Oh, okay. Yeah, and John Netto, what do you think about this issue?
What say you, John Netto? Man, I have a lot to say, but not all of it today. Yeah, actually, this is the challenge you face when you try and run surveys like these and come across just dealing with raw numbers. I think it was Mark Twain or someone said statistics are lies, lies, and more lies. Honestly, let's just take a look at the global macroeconomic backdrop for the last 5 years and understand that the central banks there have been reflating asset prices. They've been printing money. Look at what the BOJ, look at the Fed, look at the ECB, because of making capital more available. So and at the same time, there hasn't, in terms of the cost of services and goods, in some cases gone up, in other cases stayed the same. So you have more of a cash base out there. So what we have to really imagine is that these billionaires has their net worth increased with what's going on, and
Margin
so
call,
that's one
John.
case. Second case, in the last 20 years, poverty has declined, has been cut, or world hunger has been cut in half. So if we have twice the number of billionaires and hunger's been cut in half, or at least starvation's been cut in half in the last 20 years, we have to analyze that maybe despite making more billionaires on a nominal level, what's their purchasing power parity today compared to 4 years ago? And there's less hunger. So, numbers can be very deceiving. Sorry, I'm done.
Okay, thanks. And Dave, what are your thoughts about this?
Oh, I'm not going to worry about it. I think everybody here is a capitalist because we're all in the market and we're all trying to have great careers in the market. So it's something that I have not too concerned about. I did notice. I like what one of your persons who responded said that even if you distributed the wealth would end up back in the hands of the wealthy once again. And I think that's something. I don't want to get into politics because I try to avoid all sides and stay as neutral as possible. But I know the United States, for some reason, they seem to think you can tax your way into prosperity, and you can't. So as far as that's concerned, I think I'm going to take a capitalist stand, and I'm not going to worry about it. And I think if you start worrying about all these things, whether it's a news event or not, it can affect your judgment in the markets. If you get too wrapped up in what the administration is doing or not doing, I think you can get into a lot of trouble in the markets because let's say you don't like the administration. Well, guess what? S&P's at all-time highs. So, I try to avoid all this stuff. So I'm not going to worry about that.
All right. Yeah, I was going to say that too. Obviously, everyone is a capitalist and supports, or we wouldn't be doing this. But I've been a strong student of history my whole life too, and I see some of these about the French Revolution or the Russian or point like that eventually.
I doubt it, but there you go.
All right. Well, anyone else have any comments they'd like to share?
It's a good market to be a trader. Volatility's come back, up, down, up, down big, up big. A lot happening with the dollar right now. Big focus there. Most of this year has been pretty tough with the low volatility, but the last 6 to 8 weeks shows you that by being patient, being disciplined, a lot of the stuff that Dave Landry, ascribes to in his methodologies, having had the many years working with Dave and watching Dave. There's been some good opportunities the last 6 weeks, and if this continues, we'll all be much fatter capitalists in the next in the coming future.
All right, sounds good. Well, that's about it for this week then. Be sure to go to TimingResearch.com/current survey before Sunday to fill out this week's survey. And I want to thank my guests, John Seville of AcornWealthCorp.com, John Netto of TheProteinTrader.com, and Dave Landry. And thank you everyone for watching.
Thank you for having us, David.
Thank you.